Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. Luc Boiron is a leading Canadian real estate investor who's been investing since 2007. He's a former lawyer who holds an MBA, but left that world in 2016 to start Bliss Realty Inc. with the goal of flipping houses. Since then, he's built one of the largest residential property acquisition companies in Canada and has bought and sold over 850 homes across the country. On this episode, we discuss his recent Hoarder house purchase, why the wholesaling business has slowed down, flipping 30 to 50 properties in a year, costly mistakes to avoid when flipping, his flipping success rate in the last year, and a new motel project that he's working on. I think you guys are really going to enjoy this episode. If you're interested in flipping and wholesaling or just finding out more information about that whole industry, this is a great one for you. Make sure to share this with a friend who's also interested in this type of thing. And finally, I'm looking to help one person buy their first 10-unit apartment building. I did it myself a few months ago, and it's been definitely life-changing in the sense that it's helped me get to the next level as an investor. So even if you don't think you're necessarily in a position to buy an apartment building, I would be happy to consult with you, have a quick chat, and see how I can help you get there. So go to WellOffX on Instagram, send me a message there, and we can discuss it. Or if you don't have Instagram for some reason, you can book a call on the website welloff.ca. So I hope to chat with you guys soon and enjoy the episode. All right, I'm here with Luc. He's joining me for the second time. First time he came on the show was years ago, like probably 2018 or 2019. So it's been a while. I know you've been busy. I've been kind of following your story on Instagram and whatnot. So thanks for coming back on. I'll just start off by asking you, what have you been up to lately?
A lot of flipping houses. At this point, at one point I was almost exclusively wholesaling a few hundred houses a year. And now we're doing, because our investor buyers aren't buying our wholesale deals to the same extent, so we've decided to take a lot of them down ourselves. So we're doing somewhere in the 30 to 50 flips a year in addition to the wholesale business.
Wow.
And the renovations take a lot of time. And I really enjoy them. Probably spend more time on the renos than I maybe need to, but I really like it. You're referring to my Instagram stories there because I'm in the middle of the worst hoarder house or clean out of the worst hoarder house I've ever done. And it's a lot of fun. Like, we're just to the ceiling, this entire bungalow, every room, every floor. It's a wild adventure, and I'm loving it. So
yeah. Well, there's a lot there, but I guess I'll just start off by asking you, was there someone living in that house, or did they vacate?
Yeah, so they've had the house for somewhere in the 40, 50 years. They've had it. So they own it outright. The husband passed away a while ago. And I think somewhere around 7 years ago, a pipe burst and flooded the basement, and they had water shut off. The oil furnace, hasn't been filled with oil for a long time. So there's been no heat for somewhere in that 7 years as well. But there is electricity. Mm-hmm. And hoarding's a mental illness. And it got so bad that she filled the house with stuff to the ceiling and then couldn't get in and out of the house anymore, couldn't use any of it, and ended up living in her car in the driveway of the house a couple of winters ago. Rats in the car, all of that, just Tupperware bins in the carport, and then living in the car and bins with her stuff in it. And then last winter spent the winter in the shelter. So that's the extent of, the mental illness of it. Mm-hmm. Can't get rid of her stuff to the point that you're living in Ottawa winters, which are quite cold, in the driveway, and then eventually a homeless shelter when you own a home outright in the city.
Yeah.
That's the extent of it. And what ended up happening here, so we've actually been trying to buy this house from the sellers for 3 years. We've been in contact with them. And one of the sons took over as POA or guardian of some sort to help her out because of her situation, and sold the house so that he can take the proceeds of that and support her in her retirement last years and old age. So she wasn't living there. And it really, you couldn't. It was almost impossible to walk around the house. We couldn't get to the basement because the stairs were full above the main floor, and to explore when we were making an offer on the place, it was hard to get on top of the pile of stuff from the side door to then crawl around the house on top of it. Like, you couldn't stand up. It was so high. Yeah. You had to basically crawl on a mound of stuff. And
Yeah, yeah.
Crazy.
I kind of saw that in one of your stories where you're like kind of crawling through, like you said, the stuff to get from one end of the house to the other. So
Yeah.
it's really sad when you think about it that somebody's living in that kind of condition and having to go to a shelter. But at the same time, you actually probably gave them a really good solution, a good option, provided them with cash. Yes, they're not getting market value, but their house isn't also in a position to get market value the way it is. So yeah, I think what you do is actually good in a lot of cases,
Yeah.
and probably 99% of the time or more. So some
They
people
definitely
might
could have
view it
gotten more.
differently, but yeah,
They definitely could have gotten more for the house if it had been cleaned out. But this type of house, especially in this market, we're one of the best buyers for this type of house right now. Like we
yeah,
do buy some stuff on the MLS, so part of it is being able to improve it. But had they been able to clear it out, yes, they would have gotten more.
yeah,
Like this, net of commissions, I'm not for and often we do need to be quite a bit lower than market value. Depends on the property. In this case, I don't know that they would have gotten much more for the
right.
house. Net of commissions, I don't know that they would have gotten more.
Yeah,
So
yeah. I
yeah,
think a lot of times people don't, like the general public don't really understand how to calculate how much it costs to address some of these issues, right? Like there's you might get something, that, let's just say a property's worth 500 grand, a neighboring property that's in good shape, and you buy something for like 250, 300. They don't realize that you probably have to put 200 into the house to bring it up to standard or more, right? Like
yeah.
things are really expensive now compared to what they were 5, 10, 15 years ago. Yeah.
Absolutely. Yeah.
Yeah. So you said that business has slowed down in a sense that not as many buyers are looking at your wholesale deals anymore. And I've heard that from other wholesalers as well, but I haven't really heard other people say that they ramped up buying for themselves and, like, taking on flips and that sort of thing. Would you agree with that? Would you agree? Would you say that you're probably taking on more than other wholesalers are at this time?
Yeah. Some of the other wholesalers are doing a few flips themselves, but we've also been buying from other wholesalers too. And some wholesalers were more active in the flips when the wholesaling was good. So let's say, early 2022, some of them were seeing how much money their buyers were making and they were going, oh, well, I want to do that myself. And they were getting into more heavy flips. And when the market shifted, they got caught on some of them and got hurt. Whereas we were like, I don't really care how much our buyers make on it. We're in the business of wholesaling. We can do volume this way. Not that if they make good money on it, that's good. Some they're going to do better on, some not as well. But if the market's carrying it up, like we're not controlling that. We're controlling what we can buy it for and sell it for at the time we do it. So we didn't have a lot of flips when the market changed. We had one or two,
Hmm.
and that was just the location and stuff. Sometimes that happens, but otherwise, yeah, we didn't really have anything to get caught on when the market changed. And one I think we broke even on. It was a tough one regardless. It was this very small town in rural BC. It's that part of the reason we hadn't assigned it. And then the other one was near Ottawa, kind of, well, Westport, so an hour and a bit out of Ottawa. And we did well on it. It was through the market changing, but we sold it early enough through that happening. And then we didn't have flips on the go.
Hmm.
And as the market changed and things kind of stabilized to the point where we could see where the market was going, well, we're like, if people aren't buying these deals, some of them we're just going to do ourselves, right? They're too good to let go, or they're too good to let go for very small assignment fees if that's all someone's willing to pay. And so we've been taking them on. We bought from other wholesalers. We bought some on the MLS, particularly in Ottawa. We have a really good reno crew. We do renovate kind of. Ottawa is our main market. We do some in the GTA. Occasionally we do Montreal, and then we also renovate a few a year out in Vancouver.
Yeah.
All the remote ones are harder. Me and my construction manager are based out of Ottawa, so those are way easier for us to manage.
Hmm.
And we have a really good construction team out of Ottawa, so we handle a lot of the bigger renos ourselves in Ottawa.
Right. Right. How many people would you say are kind of involved in these flips? If you're doing, you said what, 30 a year, roughly 30 to 40 a year?
30 to 50,
30,
somewhere in that
30 to
range.
50. So how big's your team to be able to handle that many flips?
So part of the reason we actually do the flips is because of the size of my team. It was either, if we're not wholesaling enough, we either flip to make up the money and pay the bills and keep our employees, or we let go of a bunch of people. So we have somewhere in the 30 to 35 people on payroll in the company. And that's, lead intake, dispositions, transaction coordination, marketing, accounting, all those, departments. And we either shrink the business drastically or we turn to more flipping. Because of the rentals as well, we also had the construction manager, Alan. He's awesome in Ottawa. And so we already had him, working and managing rentals. And so we have him, we have me, and then we have two project managers or like assistants for me and Alan, kind of project managers who coordinate a lot remotely. They're based out of Toronto and Hamilton. So they don't always go on site. They often don't, but they're more, making sure materials show up on time, ordering bins, getting quotes, making sure invoices get paid, all that coordination. So really there's a team of 4 of us that are kind of managing these renos. Other people fill in from time to time. And obviously we have our accounting team that catches the invoice and make sure they're recorded and all of that, because there's a lot more bookkeeping involved on the flips, and it can be a burden in it of itself if you don't have the team to help with that.
Yeah. That's so interesting. Like your business has changed so much since the last time you were on the podcast, and obviously, it should, given that you've been doing this for so many years.
But yeah, I mean, I was on the podcast so many years ago that the wholesale business was much smaller back then.
Exactly.
We ended up growing to the point that our peak year, we did 261 houses in 1 year. That's mostly wholesales, a mix of buying them for rentals and other things.
Yeah.
And I think last year we were probably, I can't remember exactly what 2023 was, but somewhere in the 130 to 150 range for total deals for the year. So to this point, I've bought and sold close to 1,000 houses, somewhere in that ballpark. And it was probably in the couple hundred by the time I was on the podcast the first time. So a lot more.
Yeah, probably a total of a couple hundred at the time. But where did you learn how to create this sort of business? Like did this just come from trial and error, or did you attend courses? How did you get there?
A lot of the information is actually available on podcasts and stuff like that. So really, I did join a mastermind group, and it was great. It was called 7 Figure Flipping. They're kind of flipping and wholesaling based, but focused. And it's less of a coaching thing, and it's more of a mastermind. So you get ideas from other people that are in the group. You get to talk with other investors and that kind of stuff. So I found that really valuable, because when I had certain things I wasn't sure about, I had someone to reach out to. But in the end, like, I had heard people talking about the structure of the business on podcasts and things like that. And that's essentially what I based kind of as I grew the team around. And it was little tidbits here and there, like our just knowing, like, for example, we have a marketing team. They send out marketing. The calls get answered, and that can be online, physical, whatever. The calls get answered by our lead intake team, lead managers. And then they set appointments for our home buying specialists or acquisition reps, who then go to the houses. So they set the appointment. These home buying specialists go to the houses, and they sit down with the sellers. They view the homes, they take pictures, and they make an offer to buy the house. So every step, there's a process for all that. And that's all grown. At first it was me. I was all of those hats, right? Mm-hmm. And then I was figuring out how to divide it up, what I could pass on so that someone could take on one part of the funnel or one part of the process and become an expert at that. If you imagine me in my car, and seller calls me from marketing that I sent out myself, I'm writing notes on McDonald's napkins. I try to follow up a couple times, and if they don't, answer, I lose them. Versus now we have, lead managers, they have their computers set up. They can immediately look up the property on Google Maps. They can vet, they can look at comps, they put it all into the CRM as soon as they're talking to the seller. It's such a more efficient process. So yeah, it goes through there. And then once we buy it, it then goes to our dispositions team, which is the ones who sell the property in the GTA and Ottawa. That's Katarina, which is awesome. And in BC, we also have an awesome dispo called Tammy. They are the ones who sell the properties. But then we also added in, through trial and error, really, what we call our transaction coordinators, or we also call them our closing concierge, because we try to imagine it as a bit of a white glove service to help ensure the process goes smoothly on closing. So if the buyer needs a closing date change, or the seller, they speak to our closing concierge. The closing concierge speaks to the other party, ensures they're okay with it, drafts up the amendment, sends it to each party to sign. Also just calls, the buyer and the seller 2 days before closing, 10 days before closing. Hey, everything on track to close. Buyer, you have the money, right? Seller, you have a place to go. Great. 2 days before, hey, have you moved out, or when are you moving out? All of that, making sure everyone's ready to close. You learn this from necessity, because we've had situations where the sellers close, give the keys to their lawyer, and then are still living in the house. Mm-hmm. Like, doesn't work like that.
Right. Yeah.
So it's just that communication, that kind of trial and error helps you learn that process. And I would say, first of all, we have an awesome closing concierge team, really great people there. But also, I would say they save a lot of deals by catching mistakes before they happen, right? Or catching issues before they happen. You call the seller 10 days or 10 business days before closing, 2 weeks before closing, and they say, no, we haven't found a place yet. Like, okay, well, you have to leave in 10 days.
Mm-hmm.
What can we do? Do we need to help you find a place? Do we need to get you an extension? See if the buyer's willing to extend, that kind of stuff. So versus coming the day before closing or the day of closing, be like, oh yeah, we can't actually leave, right? So yeah,
So
having a team that way.
what would happen in that situation? Because I've never actually come across that, and as a realtor, where the person doesn't leave, does it become like a police matter in that case, or?
In theory, it could. I can think of 2 situations where we assigned properties and the sellers didn't leave, and this wasn't. Sorry, there was a third one. We knew the seller's son, adult son, wouldn't leave. That one, he was like, we were talking to him before closing, and the buyer knew the situation, all of it. They got a very good deal out of it. But the seller's son literally said, I grew up in this house. He was in his 50s. I've been in this house the whole time. Like, he lived for free, parents' dime kind of thing. And it was his I think his sister selling the house on behalf of the parents. And he said, I burned the house down before I let you own it. But it ended up being that the police, in theory, should have been able to get him out. But after closing, it was like, look, we own the house. Either you leave or we call the police. And I believe the buyer ended up paying him $5,000 to leave in a short amount of time, a few days, versus, taking the risk of things not going right with the police.
Yeah.
But at the same time, because the seller was there, he probably saved an extra tens of thousands, maybe 50,000 extra over what he would have gotten on a wholesale deal, because other buyers weren't interested in that risk.
Yeah.
He wasn't a tenant, so there isn't the same rights, right? Yeah. But yeah, the other situations, they were pretty amicable about it. And actually, luckily, both of those were really great buyers of ours that we worked with multiple times. One of them didn't know at all. They got the key from the lawyer, went to the house, opens the door, sellers just live in there, all their stuff. And then, communicated with the seller, and the seller was gone in a few days. That happened both the times that I can think of, but we kind of got lucky with those. And that's why we're trying to be proactive about it going forward. I mean, it's been years ago now that those happened.
Yeah.
And, they're not happening anymore because we catch it ahead of time.
Sure. Yeah. That's funny. Like, I'm just thinking what the sellers must be thinking. They go sign the documents at the lawyers, they get their money, and they're like, you know what? Let's see what happens. We're just going to stay. We'll see if they kick us out or not.
Yeah, essentially.
Yeah. So you talked about like all the different roles within your company. What would be your role then? What takes up most of your time?
Well, right now I'm very active on the flips, which isn't necessarily what someone else in a similar business would do. I'm pretty good at the flips because when I started out, I was a flipper first. I can't even remember if I had started wholesaling when I was first on your podcast, because I was flipping in volume first, switched to mostly 95% wholesale. But as we've grown the business, the team was set up to wholesale, not to flip. And so I'm very involved on the flips right now because my team isn't set up to do it. My wholesale team doesn't necessarily know how to manage flips or any of that. And I feel like I'm quite good at it. So that's what I'm involved in there. And then there's always, luckily I do have a COO, Chief Operating Officer, who manages a lot of the day-to-day and human resources stuff. Corey, he's awesome. I'm saying everyone's awesome, but they are. I have a really good team.
Well, they've been with you for a long time too, from like the names you're saying. I know I've seen these names before. I've interacted with them in the past. So.
Yeah, exactly. Yeah. I think Corey's 5 years with me now. Katarina's probably over 4. Yeah, a lot of years now. But yeah, and then so we have, what do I do? I deal with problem properties. Even when we were mostly wholesaling, I didn't work nearly as much, which was great. And I really dealt with the problems. So, sellers breaching, do we start a lawsuit? Or how do we get them to close? Accounting issues, government issues, that kind of stuff I would deal with. There was many properties that would flow through and I'd never hear about them until, they'd close. Be great. And that's, testament to how good my team is that they could run all that stuff. But when problems come up, I get involved on that kind of stuff. And training. I'm the real estate guy in our company. I love real estate. I've learned a lot about real estate over the years. So if it's like specific property questions, the way houses are built, like the construction matters, that kind of stuff comes up. So that's the other side of what I do.
Yeah.
And now kind of raising money because I'm working with a lot more private lenders for mortgages for our flips. Instead of going to mix and banks, we're borrowing first mortgages to buy flips from private individuals. So I'm more involved on that side of it as well.
Sure.
Making sure the money's there, make sure we always make payroll, pay our team, pay all the contractors. I'm involved with all of that.
Yeah. So I know you're really experienced with flips. You've been doing it for so long. I know I've heard of a couple of people getting burned on flips, especially the way the market has turned lately. What do you think is the key to a successful flip, and how successful are you? Would you say, like, what percent of your flips end up being profitable versus, break even or taking a loss?
I'd say over 90% are successful.
What would be,
There's
I guess, successful would be like a profit of any kind, really,
at
right?
least 20,000, let's say,
At
right?
least
If we're talking
20,000, yeah.
90+% of our flips make at least,
Yeah.
$20,000. Obviously that 20,000 is not a goal. To be fair, versus our intentions on the property, 20,000 would not be a success. But I would say, I can think of, again, in the 30 to 50 flips we did last year, I think we lost money on 2, broke even on a handful of others. And then there's other ones where we make, 100 to 200,000 as well, right?
Yeah.
So there's a range on what we make on them. So yeah, varying degrees of success, but on average, we do well, and that's the point, right? You do enough of them, you'll have a few losers. You only do one of them, and it's a loser, it's a problem. If you do, 50 of them and you lose on 2, you're making money on 48.
Yeah.
You're doing pretty well.
Yeah, exactly. And what's the key to successfully flipping, or what are some of like the most important things for people to know?
That's one of the hard things about flipping. So, I mean, obviously buying right is super important, right? And making sure that you understand how to adjust. It's not a perfect science for comparables, all of these are 3 bedrooms. There's no comparables that are 2 bedrooms. Okay. This one's a 2 bedroom. How are we adjusting for it? This one's got electric baseboard heat. All of the other ones are on a propane furnace.
Yeah.
How do we adjust for that? This one's a 1.5 story. All the comparables are bungalows. There's no other 1.5 stories that have sold. Okay. How do we adjust for that? Because obviously it's much worse. And if you just compare like, everything in the area is selling for, 600,000 plus, I'm buying this fixer upper 1.5 story for 200,000. That's a great deal. Well, it might not be, because you might spend 150,000 on it and it might sell for 400,000 because it's still not as good as the other properties. And between commissions, carrying costs, financing, all of that, you might be losing money or breaking even. So you may look in an area where, wow, the comps are selling for 600, and you're like, I can't pay 200 for this.
Yeah.
That could be the situation. But then there's the other side too, where you have to balance when it's a better house than the comparables, and also the potential of what it can be. A lot of times when it's a 2 bedroom, I try to make it a 3 bedroom. So there's balancing that. And then renovating, that's what I was saying about it being kind of hard. It's hard to know when to stop.
Yeah.
I lean towards, unless you have to look at what your superpower is. We do renovations. We do a good job on them. We have a good crew that can go pretty quick. I wouldn't say we're cheap on the renovations. Like, we're inexpensive. You could, a homeowner doing a nice reno could spend a significant amount more than what we do, but construction's expensive right now. And so we do spend a good chunk of change on construction. And we've done better on some houses with much smaller renos, in part because we buy well, but in part, I have to be conscious to, I can spend 150,000 on this house, and sell it for 600, or I can spend 50,000 on this house and sell it for 500. Well, I'm doing the $50,000 reno all day long,
Right. Yeah.
because, 100,000 doesn't get me 100,000 more. I still have some additional costs. I have additional costs of money.
Yeah.
I have additional costs of carrying, because $150,000 reno typically takes a lot longer than a $50,000 reno.
Yeah.
So there can be a lot of figuring out where to stop on renos. Like, not every flip is a beautiful finished product. Some of it is just, hey, this is good enough to live in, and it matches the neighborhood on what we're going for, or it gives potential for someone. This is going to be the most affordable in the neighborhood because that you could move into, and someone will buy it because it's affordable, and then they could possibly improve it later with time.
Yeah, exactly. That makes a lot of sense. On the ones that you lost money on last year, you said, I think there were 2 that you lost money on. What would you say went wrong with those?
So one I can think of in particular is I've done this a few times. This was actually an MLS one, and I've done a bit of different arrangements to try to creative strategies to try to make it work with the seller. And it was a very small house. Uh, and one thing I agreed to, instead, I didn't want to pay the seller's price because I wasn't like, we were negotiating back and forth. I couldn't get them down, even though I'd been sitting down to where I wanted to be. So what I did was I offered kind of closer to the price I wanted, but I also offered a quarter of the entire sales price above a certain amount. So the sales price, they're not seeing my profit or any of that,
Mm-hmm.
but it's like, if I sell it above this price, you get 25% of the actual sale price, the difference. So if you think it's going to sell for more than I think it's going to sell for, hey, place your bet right here, and they did, and they agreed to it. Um, the problem was we get into the house and it was substantially worse than we thought. There was a lot more like structural rot. We had to rebuild a lot more behind the
Mm-hmm.
walls. And with that happening, we spent significantly more than we budgeted. And we were selling it for more than we budgeted too, which also meant giving more of that profit
Right.
to the seller.
Yeah. Yeah.
So spending the extra didn't necessarily net us all that amount extra because, we at least, even just to break even on any extra spend, we had to get at least 125% return on it, right? Because we're actually even more, depending on how math works, but
Mm-hmm. Mm-hmm.
you get the idea, right?
Yeah.
We're only getting 75 cents back for every additional dollar we sell it for. So we better make really good return on it. But a lot of the work ended up being stuff behind the walls that you don't see.
Yeah.
And it's a much better house for it, but it didn't reflect in the sale price really.
Yeah.
So it was just worse renovation situation than we were expecting, and we spent a lot more, much higher. And that one hurt.
That's the biggest thing, I'd say, like structural issues, because if you don't know they're there, you're assuming that there is no structural issue. So you're
Mm-hmm.
pricing the home based on that, and then when you open up a wall or something, and you see a major problem. Well, all that money you're sinking in isn't going to really add value to the place, because no one's going to say, "Oh, well, you did, all new framing here or there, or put in new joists or whatever." Like, they don't care. They see the
No, they
finished
don't.
product. The majority of people. So, yeah, I
Yeah.
can see how you.
And I mean, we're not scared of structural issues, but you're
Yeah,
very right that it's the ones you can see,
yeah,
right? Someone says, hey, my foundation's collapsing or there's cracks through it and stuff. Great. We can now fix that, but we're also pricing that in. Actually, there's a house just 10 minutes from where I'm sitting. It's a project I'm pretty happy with. We're almost done, actually. Going to be listing next week. And it was almost MLS. It was a realtor who brought it to us because another realtor in her brokerage, they started preparing this older lady's home to sell and started moving some furniture out of the basement, found a ton of mold in the basement, and they didn't know what to do.
Mm-hmm.
And so instead of, going to market, a realtor that I work with often, she told her coworker, hey, how about my client come see it and they'll make an offer on it without you needing to do anything. So I went in, the seller was so stressed. Not only did she have to clean out all this stuff, but now that there was these problems, and she gave me a big hug when I was leaving, and I offered on it, made an offer, said you can leave any of your stuff behind that you don't want to clean up, because they'd been in the house for, I don't know, 30, 40 years. You've accumulated stuff by there. And I knew that we could take care of the mold issues in the basement, got the basement, stop the waterproof where we need to, and then spray foam it all, close it all back up, make it nice and pretty. And we're doing that. We're almost done the reno. But, we made the offer to the lady saying you can leave all the stuff behind. They accepted, no counter, none of that. And it was, so I'd call that kind of pre-MLS. It was about to go on the MLS, and we were kind of the solution to not go on the MLS.
Yeah.
And yeah, I'm excited for that project. I think we're going to have done well on that one. And we were really able to solve, someone's worries and someone's problems there.
For sure. Yeah. And you often get it seems like these properties where people leave things behind. Do you ever find any treasures? Like, is there anything really good that you've found or that you've kept from these types of properties?
I try not to become a hoarder myself, but I do keep stuff. My whole vinyl record collection, including the ones we have at our Airbnbs, they're all from flips.
Oh yeah.
Like classic rock. I have tons of like 70s and 80s rock, 60s through 80s.
Yeah.
Just great music.
Yeah.
So yeah, all my vinyl records are from there. I do like depending on for decor, getting random knickknacks. One house I did recently. So at the house I was talking about with moldy basement, they had a collection of National Geographic magazines from 1979 to 1985, and I'm like, these are cool. Let me keep them. We throw out so many books and stuff, right?
Yeah.
We don't. keep a lot, but I thought they were cool. So I kept them in a box. And then for another house we were doing a higher end reno on, I ended up cutting out all the cool photos and a couple of the covers and stuff, colorful, bright stuff. And we glued them onto the wall in a powder room to make it accent wall.
Oh,
So
cool.
we're able to take stuff from one house, put
Yeah.
it in another. The house that we're clearing out now, we found a lot of guns.
Oh,
The seller knew about them
yeah.
though, and we were giving them back to the seller. Like, I'm not selling random guns I find in houses, if otherwise I don't want to take the liability there, especially the handguns, but lots of rifles, hunters, but it was so buried in the house, they hadn't been able to get to those rooms in 30 years, So, those went back to the previous owner's family,
Mm-hmm.
But yeah, that was cool. We're finding it's funny, some of the stuff you find, like in this house in particular, the lady bought stuff when it was on sale. We've probably found 30 packs, brand new packs of toilet paper,
Yeah.
nice Charmin toilet paper.
Yeah. Yeah.
We're finding construction garbage bags, boxes and boxes. We've probably got 30 boxes
Cool.
of
Yeah.
construction garbage bags. And we're like, I guess we're going to use these on other properties
Yeah.
now.
Yeah. Why not?
And then I bought a motel that we're going to be renovating shortly.
Okay.
And so we're keeping kind of charming knickknacks and random paintings and stuff like that to give a little bit of an eccentric vibe to part of the motel. So yeah, that kind of stuff can be fun to find. In terms of like high value, most of the time sellers have an idea of what they want. So in this case too, they're like, well, there's some jewelry in this room. Can you make sure you get back to us? It's sentimental. Technically, we could keep it. It's not in the offer that we have to return it. It's our house now. But we agreed when we were signing the contract, yeah, we'll look for this stuff that you ask us for. No promises, because who knows, right? But we've been finding what they've asked us for, and we're returning it to them. So, and otherwise we do find some cool stuff, for sure.
What's the most valuable thing you found?
I don't know, but you know what? Like, I enjoyed, there was one house, I found a ton of vintage gaming consoles,
Okay.
An N64, original Nintendo, GameCube, all the games, like Super Nintendo, controllers, games, all that stuff. I love that stuff.
Cool,
So it was cool to find, right?
Yeah. You stick those in your Airbnbs probably or something like that, and just
Yeah. They're actually sitting in a mudroom in my house right now, but I need to clean them. Like, they kind of come in dirty.
Oh yeah,
they've been sitting there for a few months. But
yeah.
Yeah.
Do you think that you're going to continue with the same strategy, like buying really distressed properties, properties that need a lot of work, hoarder homes, that sort of thing, or do you think that things are going to change for you in the future?
I mean, I really enjoy these homes. This is not all this is not all that we buy. We buy some that are a lot more turnkey. I sometimes talk about, what we look for is a combination of seller distress and property distress. Those tend to be the best deals when there's both a situation with the seller that explains why they can't fix up the house, whether they can't afford it, they don't have the time, they don't have the knowledge, too much emotional attachment to the stuff they've hoarded in the house, etc. Combined with property distress, where there's something wrong with the property. Now, we do have situations where you find one or the other. Seller is really needs to sell quickly because they can't afford their mortgage payments, but the house is in pretty decent shape. We come across those situations. Or, hey, the property's rough. I could afford to fix it, but if you make me a reasonable offer, it's just easier for me not to. So I'll let you take that on. So we do find some of those. So I don't want to say we only find these hoarder houses. These are the most exciting. These are the ones I post about. I enjoy it. And I do feel a little bit of like satisfaction in it. Whereas like for years, the family's been trying to have, the mother clear out the house. There's too much emotional attachment. They weren't able to do it. And it wasn't feasible for them to clear it out, when they were the ones, they become the bad guys when they're the ones who have to throw out or get rid of all of her stuff.
Right.
So selling to us, like, this lady was in a homeless shelter last winter. Now they're getting, hundreds of thousands of dollars because the house was owned outright. Over 400,000 net to them. That's something for her to have to make sure she's sheltered and housed and taken care of for the rest of her life, kind of thing, right? It's a nest egg to protect her there. Combine that with, probably old age security or GIS, and CPP. She's probably, set for the rest of her life, kind of taken care of. And I don't know, that gives me some pride and some joy. And also, like, I love seeing these big projects that other people don't want to take on. I do love seeing the conversion. So
Yeah.
there's an element of satisfaction there. They're not always the most profitable. They can be, but they're not always the most profitable for us. But I find them the most satisfying and entertaining. I mean,
Yeah.
yesterday I was digging through that house, and it's just like all the stuff we're finding. We're like, oh wow, no way!
Yeah.
Look what I found.
Yeah. Yeah.
Just little stuff, like, yeah,
Yeah.
everywhere.
Yeah, yeah, that's really cool. Um, so we talked a lot about your business and flipping and all that. What about your personal portfolio? What do you? I mean, you mentioned some Airbnbs. Is that your main focus in terms of your buy and holds? Or I know you've got some multi units as well. I think some in Welland and that sort of thing. Um,
Yeah.
what's your kind of personal portfolio looking like, and what do you think it will look like in the next 5 years?
Um, well, I know I've told you, we don't broadcast this, but um, my wife and I are getting a divorce. So our portfolio is kind of being split, and some things that were held under her name, like all the Airbnbs she owned, the 4 cottages we owned as Airbnbs she owned. So she'll probably end up keeping those. I own some rental properties separately, so does she, and then we own our multifamily together. So we own, a 24 unit, an 8 unit, a 17 unit, and a 12 unit. We I don't know what we're selling of that. We're open to selling some of them. I know we both are quite attached to the 24 unit. We like that one quite a bit, so we'll probably continue owning that jointly. So I guess with the divorce, we're in a little bit of a transition period, and I'm not sure how the portfolio is going to look going forward.
Mm.
I do know, as I mentioned earlier, we bought a motel that I'm turning into a 15-room motel. I'm really excited for that one. So I guess that I like the Airbnb type thing. I like kind of hosting for vacations. And so the fact that, she's keeping those, doing this motel is satisfying to me in that way.
Mhm.
I really love like the decor and that side of it. I love real estate, as you can tell.
Yeah.
So that kind of satisfies my itch. And I hope, we're making these kind of fun rooms and stuff like that. So I'm hoping to be able to have them up on Airbnb as well, because it's just a different platform for people to view and book through that way. So
Yeah.
yeah, I'm hoping for that.
Okay, cool. Well, first of all, sorry to hear about the split. Hope all goes well for both of you. And that motel, I know you mentioned it earlier. You just mentioned it again. I'd love to hear a little bit more about that. So, where is it? What are your plans with it? How much work does it need?
So it's in Denbigh, Ontario, Denbigh, kind of the middle of nowhere. It's about 40 minutes east of Bancroft.
Okay.
So it's got similar activities to the Bancroft area. You've got the lakes, beautiful trees, really scenic. Not far from one of the gates of Algonquin Park. It's 20 minutes from Bon Echo Provincial Park, which is a cool provincial park with indigenous hieroglyphs in the caves and stuff. It's cool.
Yeah.
I went there as a kid. It's 2 hours west of Ottawa.
Okay.
And since I'm based out of Ottawa now, I grew up in the GTA and started real estate in the GTA, but I'm in Ottawa now. And I actually have some crews that are out closer to that area. So
Mhm.
I probably wouldn't have tackled this from a renovation perspective if I wasn't closer to it and able to manage it. But because I have the construction crews, the construction manager out of Ottawa, all of this, we have the ability to get this one done. So I'm paying $250,000 for an 8-room motel, plus I think the other building is about 3,000 square feet of like residence and former restaurant. So we're combining all of that together into 15 motel rooms plus a common area that's going to have like cool activities for guests to do, like a record setup, an arcades, lounge area, kind of coffee bar and dining area,
Nice.
as well as like outdoor activities, volleyball, badminton, cornhole, fire pits, barbecues. So kind of trying to make it a bit of a destination itself because, other than the fact that we're not going to have a restaurant, there's not a ton to do around there. So people can kind of head out there, kind of want to go higher end design and fun in the rooms. So
Mhm.
good girls getaway, couples getaway, things like that. So I'm excited for the decor aspect of it. I'm excited to be able to do like a company retreat with all my employees out there.
Yeah, for
Um,
sure.
but yeah, I want to make it a bit of a destination because it is kind of in the middle of nowhere.
Mhm.
We paid $250,000 for this property with all of that on it, 2.5 acres. Um, I expect to spend about $500,000 in renos to get there.
Okay.
So I'm actually raising money for this one. So about 800,000 total. So there won't be a mortgage on it initially. Finish the renos, operate it out for a year or two, refinance. I hope, we've run our numbers estimating the value at 1.7 when it's done.
Okay.
So we'll see if that's accurate. But my understanding is hotels, motels we'd be lucky to get something like 65% of the after repair value once it's operating.
Yep.
But that'll be plenty enough to kind of pay out the investors who then, the way I've set it up, they'll still have some equity afterwards. And yeah, keep operating it with good cash flow. By the way, that's valued at a 15 cap.
Wow.
So that's the potential of motels. But part of it, the key is here, it's really good marketing, it's really good design. I don't want to just be, any of the other 70s motels that you pass in, on the way to Bancroft, right?
Mm-hmm.
So part of it is making it a destination.
Yeah.
And I think there's a lot of potential on it. I'm excited for it. It's a big reno, but I've got the crew to do it. And yeah, I'm excited.
Are you going to get a Netflix crew to film the whole thing?
I wish. That'd be really cool.
Are you, maybe like last question here, are you finding it harder to raise capital? I mean, that's kind of a common thing now. People are saying that not as many investors are actively looking to invest their cash. Money's a little more expensive. Are you finding that it's been a little harder on your end, or are things still moving along really, really well?
You know what? I've raised very little money myself over the years.
Mm-hmm.
I mostly did most of it myself. Like when I was wholesaling exclusively, I didn't need a ton of capital, if that makes sense, enough for working capital, but nothing crazy because we weren't closing on the houses. Mm-hmm. But when you start closing on houses, you have to raise money more. And, we have decent capital reserves ourselves. So we were doing, 20 flips at a time, kind of with a MIC as a first lender, and then our down payment and renovations and stuff. And we were getting stretched with the reno budgets and down payment and renos, mm-hmm. With putting 20% down on 20 different flips and all of the renos out of pocket. So that's why we started raising, where we're trying to raise, kind of 90% of our all-in cost on projects. And then mm-hmm. we're out of pocket very little on the projects. And we keep way more in reserves now in the business, which is nice.
Yeah.
But yeah, we haven't been trying to raise money for flips for very long. So I would say no. Mm-hmm. I imagine it would have been way easier, at the beginning of 2022, but I wasn't raising money back then.
Yeah.
It was very rare. I have a couple joint venture properties. The 112 unit I have, we have a partner on, a duplex, a single family, and a triplex I have partners on. That's it. Mm-hmm. And they were kind of, I wasn't actively trying to raise money. It was people kind of I knew that I went to partner with on those deals. So I guess it probably would have been much easier before to raise money, but since I wasn't doing it, and I haven't kind of overused, over leveraged, over borrowed on my network. Mm-hmm. It has not been particularly hard to raise money because I'm not trying to raise a crazy amount either.
Sure.
My business isn't built around raising money.
Right. Yeah, I think like your perspective is a really good one. Like you feel, I feel like you're really confident in what you're doing, and there's no desperation kind of from the way that you'd be raising money. So I think that really helps. But I'm glad things are going well overall in your business, and I hope things go well with this motel. I look forward to kind of following along if you do share that journey on social media. To finish things off, is there any final thoughts? And also, how do people get in touch? What kind of services are you offering, if any?
Yeah, absolutely. Trying to think. I'm not the greatest at getting back to people always, but I do try to. If you message me, probably best to just follow me on Instagram. It's Luc, Luc Self Wealth. Mm-hmm. So that's the best place. DM me there. Let me know you heard me on the podcast, and I'll try to get back to you there. If you want to join our buyers list, so that's again, you can choose by area, by GTA, Ottawa, Montreal, or Vancouver. That's Off Market Bliss, like BLISS.ca, offmarketbliss.ca. You can go there, select the area you want to receive emails about, and sign up there.
Yeah. And you can check out the show notes if you want the link to that website as well. Luc, thank you for doing this. I appreciate it. I know you're a busy man. So I look forward to, again, following along and seeing how things go with this flip and some of your other projects as well.
Oh, it was fun, George, and I always like talking to you. So thanks for having me on.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.